is the net interest margins for the bank? Because we don't have that figure with us.
Net interest margin is at 3.45.
Okay.
We have improved over March. March it was 3.37 and we have gone up to 3.5. It has moderated over June because of 2 rate cuts which we took. So more or less it's quite good. I would say very good.
Jyoti, hi, good afternoon. What about the asset quality? If you could take us to that as well, and what's the outlook?
Our September quarter gross NPA is at 4.20%. It has come down a tad year on year, September 14. And June, it has come down, I think, by nearly 25 basis points from 4.45. And the highlight there is that our provision coverage ratio, we have increased to 66.14%, whereas in March it was 57.05%. This is the second highest in the last 4 years. Once we touched 70% when the RBI diktat was there. So there also we have got provided for quite well.
Okay, can you give us some more numbers in terms of what the fresh slippages were this time around and what was the restructuring as well?
Just a second. Quick. About 300 odd crores, 305 crores of fresh slippages were there in the current quarter.
Okay.
And during the current half year, it was 530 crore.
Okay. So have you seen...
Whereas this has come down for the last half year, it was 637 crore. So we have, 100 odd crores of less NPA addition.
So you are seeing an improvement in your asset quality. From this 4.2% mark that you clocked in this quarter, how much do you think it could drop to further by the end of the fiscal?
See, situation is fluid because with a lack of, very positive signals in the economy, I would not hazard a guess that we will definitely drop, but then, well, we are trying to reduce our NPAs both in retail as well as in corporate loans. Corporate loans, I think to a degree it has stabilized, but then, suddenly somebody catches a cold. That's the situation.
Okay. What was your credit growth last quarter, and where do you see that heading?
Credit growth has been very, very stunted in your commercial loans. We have done well in retail and we are focusing on retail.
Okay. Hi, Jyoti. I just want to know whether, you think your asset quality issues have peaked. Will we start to definitely see, lower slippages in the coming quarters and hence a lower percentage of gross NPLs?
Yeah, I feel they have peaked, or maximum up to December. There are certain accounts, they are within 85 day, 89 day, irregular. So those again are part of the banking system. There are such large consortium accounts that, living hand to mouth literally every quarter. So that is the concern. Otherwise, the mega problem I feel we have seen.
Did you have any restructuring on that 525 route?
We had some restructuring on 525 route, about 620 odd crores.
Which industry?
This was iron and steel.
Okay. And is there a chance that your restructured or your refinanced portfolio may fall into NPL?
Nothing majorly. I don't expect any major movement over there to NPA.
You have any exposure to SR Steel?
Yeah, we have exposure to SR Steel.
So you were part of the consortium which is now refinancing it?
Yes.
Okay, what's your exposure?
That is around, I think, 600, 700 odd crore, if I'm not mistaken.
Okay. What's the game plan to meet this small bank challenge? Is that small bank as well as payment bank challenge?
Game plan is that we have already, started opening numerous semi-urban and rural branches to take care of the challenge because they will be attracting mostly our CASA. And in Rajasthan, we have got very high CASA. Thanks to the state itself, it has been a trend, I think, last 20, 30 years. So it is basically giving better service and being right on the ground. That is what we are planning, covering the ground so well that we would not like to be pushed out anywhere.
What is the percentage of your deposits that are current and savings account?
It would be around 38%.
Okay. And any threats to your asset portfolio because of small banks? I think AU Financiers in that region has got a license to be a small bank.
Financier at present, yes. They are our compatriots at now. They will be our competitors shortly. But the thing is that at present they are not a threat.
Okay. What will your margins look like now and what will they look like by end of year?
See, as already I have discussed, our net interest margin is 3.45. I expect it to moderate by 5-6 basis points once the full, effect of the rate cut is in the next 3 months to come.
Okay.
But then I expect that because of moderation in our interest rate paid on deposits and, high cost, presently that will be classified as high cost because last year interest rates were higher. So even if I refinance them, I am refinancing them at 1.25%, literally lower. So then I don't expect much.
Should we expect another deposit rate cut and base rate cut anytime soon?
We are comfortable. And our interest spread is around 4.04%, which is pretty good.
Okay, Mr. Ghosh, just one final question. Your fresh slippages have fallen quite a bit this quarter. Can you just throw some more color on the sectors where you've seen lower amount of slippages that you're exposed to? Where have you seen lower amount of bad accounts?
It has been across the industry, ma'am. Okay. Basically, our stress was mostly in iron and steel and all. Whereby, last year we restructured under CDR or bilateral and things like this, and more or less that has stabilized.
Okay. You're the first mid-cap public sector bank to announce numbers, and they are truly eye-catching. They're truly excellent, especially on the asset quality front. Can we generalize this to the industry? Should we expect that the worst is over for other banks as well, at least mid-cap banks?
SBBJ historically did not have very large exposure to large corporates. We were keeping it around 50 crore, 100 crore. So whenever the hits came, they were of a moderated amount. Whereas larger banks obviously will have larger hits.
Okay.
So and we are not present in all the large corporates. We have been a retail bank, concentrating on retail for the last 5-6 years.
Okay, so what's your year-end NPL likely to be?
We would like to keep it sub 4%.
Okay. All right, Mr. Ghosh, we leave it at that. Thanks for joining us. That's the word coming in from SBBJ. Good numbers, and the stock is up about 5.5%.
Very good numbers, and one hopes that if this is the harbinger of numbers for the mid-cap public sector banks, we have a good thing going.
And it's good to hear that he said lower amount of stress in some of the vulnerable sectors like iron and steel, etc. Let's see whether that lasts. But